Hey everybody, and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse, and on this channel we try to focus on plant-based companies and stocks. And today I have a different company for you that isn't considered plant-based yet, but is going to be by the end of the year. But they have been around for a lot of years, and it is the typical sandals that we see here on the video that people have been buying for comfort for years and years. And it's actually been a company that's been doing extremely well for years, but especially as a stock in the last year or so, or actually just when Rona started. And we're going to talk about why that is. But before we do that, as always, I would truly appreciate an early thumbs up, since it does help spread the video to more people. And if you haven't subscribed to the channel yet and you are interested in companies that are plant-based like Beyond Meat, Tattoo Chef, the very good food company, maybe Oatly, to name a few, make sure to subscribe and don't forget that bell button. Thank you folks, I truly appreciate your help. So first of all, let's take a look at the stock chart. Ticker symbol CROX, CROX. Very fitting there. And it is trading in the NASDAQ. And at the moment, it's $155. It went down yesterday about 1.7%. But the special thing here, guys, if we take a look at the last year on the chart, it's at $155 now. A year ago, it was down at around 40 bucks. I mean, that's more than a 10 bagger, right? More than a 10x. And just before Rona, it was, well, then it was actually nothing special there either. It was actually less. It was around 25, 30, up to 40 in December of 19, and was doing pretty well then, I guess, for when it comes to the 5-year chart. Then it took a steep turn down to $16 just in March. And then you can see that it's just basically been flying up since then. And we're going to talk about why that is. So if we just take a look a little at the company, for you who might be a little unfamiliar, this company has, they've been selling products for years and years now. And they are famous for their comfort shoes, right? And their sandals, but they are actually expanding into a lot of different companies. So we look at the men's section here, you see all these different, they have clogs, sandals, slides, fuzz, flip-flops, loafers, shoes, sneakers, accessories even, boots. So you can see basically everything. And let's just take a look at the sneakers. I didn't actually know that they had these kind of products. I've seen mainly their loafers and clogs over the years. And then if we take a look at the women's section, similar things, different colors, different fits, I guess. But basically, they have a lot of things. They do seem to have a lot of TAM possibilities here, a lot more than I thought. So, and what I've known for years is that people who work a lot and they're standing up a lot, they really love using these because it gives them a lot of comfort, and it does seem to be helping whatever foot or knee issues they have. Folks, let me know down in the comments, anyone been using these? But the interesting part here, obviously, why I took an interest is that I found out, I think it was now during summer, that they are actually going vegan. So shoe brand Crocs is officially going vegan to fight climate change. And I think, as we know, this is going to make this company probably even more popular and even more interesting, because they are showing that they care for their environment and sustainability. And as it states here, Crocs brand will be completely vegan by the end of 2021. So it's this year, guys. The brand committed to no longer including any animal products in its collection as part of a larger sustainability initiative to become a net zero company by 2030. While many Crocs styles are vegan and made from its synthetic cross-light material, the brand has used leather in some designs, an environmentally damaging animal-derived material. So I think this is actually going to make it even more interesting as a company. And the question is, you saw how much has actually grown. Now, you might be wondering then, is there more growth in this company? And we're going to talk about that. So just stay tuned. But first of all, I thought we could look at their Q2 report, which was just recently. And if we take a look at their press release for 2021 here, they had incredible numbers. Incredible numbers, folks. They had record revenues of $648 million, and that's an increase of almost 100% year over year, 93.3%, or an 88.4% on a constant currency basis as compared to 2020. So, and they grew a lot in the Americas, 135%, but they are going into new markets, Asia Pacific being one of them, up 27% there. And then in the MEA, which is Europe, Middle East, and Africa, up 52.6% there on a constant currency basis versus prior year. So very, very impressive indeed. And another thing that's actually even more impressive is their operating income more than tripled to $195 million compared to 2020. And operating margins expanded to 30.5%. And another thing that is even more impressive here, I'm going to show you here down here, guys. First of all, the balance sheet is about $200 million. So when they have access to cash and cash equivalents, that's about $200 million compared to December, which was $135 million. So they are bringing in the money more and more, right? That's what we like. And I do like to compare that cash flow, that free cash that they have with their liabilities. And as I said, it's about $200 million. And we take a look at their current liabilities. The total liabilities is about $1.1 billion. And normally I would say that doesn't look good, right? That's kind of scary. I want this number here to be higher than this normally, but it all depends on the kind of company, right? If it's a fast expanding growth company, which this is definitely, and we're going to look more about at that, I don't think that's so much to worry about, but I do think it's a thing to keep an eye on. And with these kind of liabilities, it's important to keep an eye on that often, right? So we got to ask ourselves the question, is this a good investment? Because they have flown up like really fast. Now this article here is a little old, so the numbers here isn't 100%. I think it's 1 or 2 months old, but I thought it was really interesting. So is this an unstoppable footwear stock? It's up 260% over the past year. It's actually more now. And if we look at Nike and Adidas, right, one of the industry leaders, they've haven't even been close to hit the kind of numbers this company has gotten, right? So, and we have to ask ourselves, is this just temporarily? And it doesn't look like it is actually. Why did it actually fly up like this? If we take a look again, here we have Rona hitting us, right? Down $16 at that point, and then flew up like crazy. And why is that? Well, one of the bigger reasons here is that a lot of people, as we know, started working more at home, right? Which meant that you want to be more comfortable, apparently, like they say here, but you want to look cool. And you want to have something that feels healthy also. And this is what it brings to you here, right? As it states here, in addition to being a go-to footwear choice for workers who spend long hours on their feet, Crocs have always had a solid fan base among younger consumers. And it's something that's obviously helping here then is when they've had even more collaborations as of late with megastars like Justin Bieber and Bad Bunny. And that meant obviously that this company has become even more popular. And as we stated, it has grown like crazy. But something we really need to keep an eye on here that is extremely positive. As I said, I didn't like the cash balance being way lower than the liabilities. But something that makes me feel really comfortable with this is that if we compare it to Nike and Adidas, right, they can't compare. We're going to compare what kind of incomes or what kind of revenues those companies have and compare the price to sales. So stay tuned. But Adidas or Nike can't compare to their gross margin. Look at Crocs gross margin, almost 62%. Now that is the markings of a 10 bagger, a 100 bagger. I'm not saying it's going to be a 100 bagger, but that is the markings of a 100 bagger. Actually, if we talked about Christopher Myers' book, 100 baggers, and he analyzed hundreds and hundreds of stocks that could go 100x or did go 100x, and this was one of the markings, having really high gross margins, right? So that is very attractive, I think. And as they also state here, that when it comes to the average selling price for the company's product was just around $22. So not only are they affordable for consumers, but they generate immense value for the business, meaning that when they sell these products, they get to keep a lot of that money, right? So very impressive indeed. And again, it doesn't look like they're actually slowing down, as the management here is saying that they're very confident. Quote, "We continue to see strong consumer demand for Crocs brand globally. On the back of record second quarter results and continued momentum, we are raising our full year 2021 guidance and forecasting sales growth between 60% to 65% for fiscal 2021 compared to the previous year." And that is impressive, right? And as I said, they are moving into other parts of the world even harder. So, I mean, they're looking into not only, obviously, the US is still comparatively a big market for them, but Asia is a huge opportunity. And when it comes to Asia, China in particular is the second largest footwear market in the world. So there is a massive potential. So I think this is going to be really interesting in the years ahead for sure. And if we compare it now to Adidas, right? Before we do that, let's just look at the statistics here. The market cap is now around $9.6 billion, right? And some of you might feel that, whoa, that is super... that's a pretty large market cap for such a small company, right? And considering that was only about 1.5 years ago, about $16. But look at the PE ratio here, about 15, right? That is pretty impressive, right? For a company that grows this fast. And then let's take a look at the statistics here. You know, I love to look at the PE ratio, 5. Now that's an incredible number, right? It's bringing these kind of numbers as we've seen. I mean, they doubled in the last year, basically, their growth capacity here. And the price of sales is still 5. So they're bringing in a lot of money, even though they're valued quite high. But the funny thing is, if we let's take a look at Nike, right? So they're also around $156. Obviously, they're a much, much bigger company, almost 250 billion. PE ratio around 44. So high number there at the moment. But statistics here with price to sales, 5. It's actually 5.5. So their price to sales is actually more. So they're not doing as well as Crocs. And then we have Adidas. Let's just try to find them here. They're trading at $165, $166. And if we take a look at the way they've grown in the last year, it's basically been stagnated. It's the same with Nike, right? And they're at about $65 billion and their PE around 33. But if we look at their statistics, yeah, this is what you would expect, but it's about under 3, right? So it's a stable company, not growing that much. And that is the weird thing here, right? That is the weird thing, I feel, because they're basically very close in PE's ratio, but these other companies are standing still, basically, which is not weird. They've been there for decades and decades. And then we have this company that just in a year has grown this much, and it actually doesn't seem to be slowing anytime soon. And I must say, considering the PS ratio and considering the kind of revenues and the gross margin with 61 to 62%, folks, I would say there's still a lot of room for this company to grow. So it will be interesting to follow that stock in the years ahead, I would say. But before I end this, I just want to say something else also that I find very interesting. And that is that the CEO is actually planning to buy back the stocks, buybacks then, right? And that is what you want to see in a great company too here. First of all, they say that they do hope to get in within the next 5 years to have about 5 billion in revenues per year, which is impressive, representing a compound annual growth rate of over 17%. And that is, I don't think that's impossible at all. That might actually be low from what we've seen so far. And they are thinking of repurchasing $500 million of shares in 2021 by the end of Q3. And that is also the sign of a great company. That's actually also a sign of a 100-bagger, according to Christopher Meyer. Because if they buy back their own shares, that basically means that they feel very comfortable and they do expect the company to do really well in the years ahead. But what's even better for the people who are invested, I'm not invested in this company as of yet, not sure because what I'm going to do, but I'm going to look into this company more. I just wanted to bring this to you guys' attention. But what that also means is that you as an investor in a company will actually have a bigger part then, right? It will be much more worth, but depending how many stocks they have, right? But it's going to be more worth for you. This is typical what Apple does all the time, right? They keep buying back their stocks, owning more of their own company. So this is the kind of thing you want to see in a company that is going to do really well over the years. All right, folks, that was what I basically had to say about this company at this moment. This was more of a first look, not a deeper look, right? Just wanted to give you a perspective of this company, and I do like that they're going vegan now, 100% plant-based in the end of the year, and that's one of the bigger reasons why I found it interesting, but that it has been growing the way it has in the last 1.5 years. So if you want more about this company, if you're interested more in this company, let me know down in the comments. Well, that was it for today. I truly hope you got a lot of value from today's video. And if you did, make sure to smash that like button and help me out. And if you want to keep getting more information regarding other plant-based stocks like Beyond Meat, the Tattoo Chef, the Very Good Food Company, well, then it's just a button away, and push that subscribe button. And don't forget that bell button as well, right? Thank you, folks. I truly appreciate your help. And I'm sure you know that this was not financial advice. These are just my own thoughts and opinions. It's important to do your own due diligence. Again, guys, this was just a shallow look at the company. Take a look yourself also. That's important. All right, guys, have a great day. See you soon, and peace out.